So shall I begin? It's a great honor and then to be in the CMU summit again. I think this is the 7th or 8th time I've been here. I've actually trying to attend every of the CMU summit. It's such a great event. I think I only absent for once in the year of 16 or 17. So it's great to be back. And then even though it's in a different scenario, this time it's the first time online. So out of the CMU summit experience, and then it's great to have the chance again. And then it's actually thanks for the great organization of the CMU summit. Today, as for, I think there are a lot of great speakers before or after me to talking about the tech trend. For me, as a early stage venture capitalist, I'm going to spending a little bit of the time to talking about what we see last year from the investment point of view, and then what we're going to be experiencing for the year 2021. So we make it a name of the world. It's actually returns to, or began to return to certainty. This is actually the brief introduction of our fund that we actually focus on early stage investment, and then we split our fund mandate into three main categories. 1/3 of them is in biotech, 1/3 of them in what we call the industrial technology, including chip material, etc. And then 1/3 of them are actually focusing on the consumer sector. So for the year of 2020, and then for China, it's actually a couple of years before 2020, because there are actually a lot of things happen during the past 3 years, specifically when we're talking about consequentially, first of all, the economical structural change. Second of all, the international relationship, including the China-US trade, etc. And then it comes down to the COVID-19. All these events actually happened during the past 3 years. It caused actually, it will lead to what we call it the consumer or the massive population's psychology change, and that will change their behavior a little bit as well. Because these events actually, first of all, it's hard to change by individual. Second of all, it happened to everyone, or at least it influenced everyone in one way or another. So when people are actually experiencing these dramatic change, which they cannot or they hardly can change anything around that, and then they tend to become very risk adverse. What we call, when people are experiencing great uncertainty, they will be trying to seek for certainty. For example, that explains a lot of things happen during the past year when the COVID-19 spread, either in China or in US. Because when people are experiencing these kind of uncertainty, they tend to not making any sort of like middle to long-term decision, or avoid to making that. For example, to buy a car, a new car, it's actually going to be about a 3 to 5 years decision. And then during the first half of last year, for China's, the car-related market is actually dropped significantly, even though the whole year is actually not dropping a lot. It's actually just about 10% short of comparison to 2019. And then for, of course, for buying a real estate, buying a house is actually another 10 to 20 years of decision making. And then that explained a lot for the first quarter of China. of 2020 is actually the number drops a lot, etc. And then when it occurs to the economy, that explains a lot as well. First of all, the so-called the asset, the manufacturing or the capacity expanding behavior is actually dropping a lot for the first 2 and 3 quarters of the 2020. And then even the real estate related investment, the long-term investment from the developer side is actually dropping significantly, etc. And then taking a little bit of half series of facts, the birth rate of China is actually dropping significantly in the year of 2020. Because actually, whether or not having a baby is another 20 years of decision making. So this is these kind of things are actually when people are experiencing dramatic uncertainty, they tend to avoid, or they tend to not doing any sort of like a middle to long term decision, specifically when it occurs to investment or money. And then it could happen to individual, or it could happen to any of the company or entity, or it could happen to any sort of like a social group, because it's actually from the bottom up to actually influencing everyone. So that's what happened. That explains a lot of things in the first half or in the first 3 quarters of the 2020. And then for this year, first of all, there are a lot of change, even though the change looks like it's happened dramatically. First of all, the U.S. has changed to a new presidency, and then second of all, it could be the vaccine, it could be the way of like China trying to control the spread of the COVID-19 plus the vaccine. Etc. So that's actually COVID-19, or it could be like the people tend to be used to or accept the circumstance of the COVID-19 situation, etc. It could be either one of these reasons. People tend to accept the cases of the COVID-19 or control the spread of the COVID-19. So that's the second issue. And then for China, the economical structural change happened at the beginning of the 2016. It seems to me like these change has come to sort of like come to an end, or come to completion by the end of the 2020, and then so it comes into a new period of the economical structure. So when we're talking about these change happening at the beginning of 2021, we're talking about these dramatic event, which actually influencing people's uncertainty or risk-averse decision making are actually gradually change towards the certainty. So from our point of view, as for the year for 2021, at least for China, as what we are now experiencing, people are starting actually from the 4th quarter of 2020, are becoming shift to the certainty for every individual, and then for the company or for the economical behavior as well. For example, the house buying, and then also the new car buying are hit sort of like a new high at the 4th quarter of 2020 during the past couple of years. And then even though there are some control or serious policy about investment into the real estate, still there are a great number in the 1st quarter according to the microeconomy stats. And then we see the so-called manufacturing industry investment has come back to the positive numbers starting from the month of November, and then actually it's is get into the first quarter of 2021 as well. So from these change of the microeconomy numbers, we can see people, or for most of the people, the behavior change reflect a little bit of a psychological change from the great uncertainty shifting to a little bit to the certainty because of the dramatic events, as we quoted about the China-US, the international relationship, the economical structure change, along with the COVID-19, etc. These event has gradually shifted from the most uncertain to a little bit of, or gradually certainty. So that's actually changed everyone's behavior, and then changed the economical structure and then number as well. So that's actually what will continue to happen in 2021. And then that's actually happen to everyone and bring them together. It will change a little bit of, or it will change dramatically for the economy in the year of 2021 or 22. It's not only in China. I guess it's happened in different degree across the whole world. Even though for the past year and a half, I haven't got a chance for international travel, but I guess because of the same reason, it will gradually occur, or it will dramatically occur to every part of the world. And then, but there are some other things, as we quoted in the PPT for the third part, which is during the year of 2020, there are a lot of other things change from our investment point of view, and that will put a lot of impact in our industry. In short, by stats, for the year of 2020, there are total production of new money. The liquidity is actually increased by about a little bit more than $2 trillion US dollar worldwide. It's actually historical high, and it never happened before. It never happened before. So for the over $2 trillion US dollar liquidity has been produced. This actually has a number, and then has an effect of produced more than $3 trillion US dollar debt in 1 year worldwide. And then also it produced a little bit of over $3 trillion worth of market cap across the whole worldwide stock market. And then that's actually drive the total debt of the whole world to about close to 27 trillion US dollar, which is about 3 times of the worldwide GDP. And then also it drives the total worldwide market cap to over 10 trillion US dollar, which is about more than 110% of the worldwide GDP. And then the market cap number, or the market cap volume compared to the worldwide GDP, is actually what we call the Warren Buffett index. Means it's actually definitely at a so-called unreasonable range for the so-called Warren Buffett index. And then that's actually what happened last year from the money point of view. And then it will actually dramatically influencing 2021 as well, because for last year, for all these money, these debt, and these market cap increase, most of the money is actually not began to flow dramatically to other country, to other industry, to other asset, etc. Most of them are still within the border or within the asset they're familiar with, because actually there are 2 reasons behind that. First of all, the money has been produced so quickly, so fast. It's never happened before. Secondly, just because for the COVID-19, it produced two results. One result is actually it's very hard to do the international travel. Second of all, it's posed a lot of uncertainty to every industry and asset. So as we're talking about, people tend to seek for certainty when they're experiencing the uncertainty. So the money or a lot of the money tend to stay with the country, with the industry, or with the asset they're familiar with before, and then they're trying to seek for certainty. And that certainty actually explained a lot of phenomenon for the last half of 2020. For example, in the U.S., the stock market, of course, increased by a lot. Specifically, the money are flow into those big companies who tend to avoid the uncertainty of the COVID-19. That's actually the internet related big companies, etc., the long distance communication, etc. For China, in a different way, because in the China's A stock market, there are not a lot of big internet related companies. So the money tend to flow into those what we call the consumer market, specifically those consumer products which are necessity for the living. That's produced a historical high for most of those companies, including we're always talking about, including the Maotai, the most famous alcoholic drink for China. So that explained first of all, the money has been produced in a very historical amount. Second of all, it tend to seek for the certainty in the last half of 2020. I haven't been flow into different sector, different country, or different asset yet. But in the year of 2021, because of as we said, the COVID-19 is actually gradually being controlled. The international relation tend to getting from the most uncertainty to gradually certainty with the U.S. new presidency, with the new China-U.S. relationship change, etc. A little bit of because of these reasons, the money are going to be begin to flow into different countries seeking for opportunity for different industry, for different asset, etc. So this year, from the liquidity point of view, it's going to be very dynamic for different country, different period, different industry, and then different asset. For example, in the first quarter of 2021, we're having a lot of interesting phenomenon happen. First of all, even though China has experiencing the historical high first quarter number, which the GDP increased by 18.2 percentage, but still starting from the year of the March, the money, specifically the foreign money, flow out a little bit because of the reason U.S. has actually put into a high stimulus plan by the new presidency, and then along with the spread use of the vaccine of the COVID-19. So people are actually expecting in the second quarter or even the third quarter, the economy of U.S. are coming back from the very bottom of the last quarter, and then it will experiencing a very fast speed of coming back. So the money actually flow back into U.S. a little bit in that way. And then, but for the fourth quarter of the last year, we see a little bit of the foreign money flowing into the China market for the reason it actually has get rid of the, or at least in the most part of it has get rid of the COVID-19 influence. So the money are actually betting for the economy growth of the fourth quarter in a very strong way. This phenomenon actually explain what we call the money flow began from the end of last year and then will actually last the whole year of 2020. And then that's actually, it's going to be a very huge amount of money because it never happened before. When it began to flow here and there, began to flow into one industry or another, or get out of another, it will make a dramatic influence on different industries, specifically from the investment point of view. And then for the year of for the year of 2021, specifically in the month of late February and then March, there are a lot of argument and there are a lot of speculation on the so-called investment into the equity market or into the debt market because of the 10-year U.S. government bond has changed dramatically in specifically that period of time. And then that's actually another proof of when such a huge amount of money worldwide began to flow here and there in different asset, different country or different industry, it will put a lot of impact and then will drive the market very dynamic. And then it might cause some sort of like a problem or some sort of crisis as well. So for this year, in short, from our point of view, for the whole economy, specifically in China and then maybe US, and then gradually worldwide, people are experiencing from the uncertainty to relative certainty, or gradually shift to certainty, and that will change a lot of the economical data or change of the economy development speed as well. And then it will influence different industry as well. That's one thing will happen in 2021. And then another thing is actually because in 2020, the worldwide has produced historically high volume of money, or let's say liquidity. And then that money will begin to flow and then begin to speculate from the last quarter or from the end of the 2020 all the way through the 2021, or even get into 2022, because the volume is so big, it never happened before. So it will change a lot of things from the investment point of view, and then it will might be some dramatic impact or influence in different industry, different country, or different asset. So that's actually another part of a great uncertainty happened in 2021. And that's actually the first time, at least from the point of view of the amount of the money, as the historically during the past 200 years of the financial industry, is actually the first time this volume of money will going to be flowing into, or at least speculate into different country, different industry, different asset. So what we'll see about what that will cost, and then what's the result of the different industry or country or asset has been or will be influenced for that reason. The last two pages actually trying to answer what we are being asked the most frequently for the past quarter. But the answer is actually we have explained during the first page of the PPT. So in short, let's talking about China, which I am more familiar with. I think for China, it will probably the investment will getting very hot, or getting into, I mean, from our PE or VC investment, will get into, or at least will continue a little bit of a bubble through the year of 2021. Basically, the bubble will cover most of the sector, not only in the tech, but also in the bio, as well as in the consumer market. But will change gradually from the consumer market to the specifically to the biotech related. And then it's already happened the first quarter of 2021 as well. I think for the last half, for the third quarter and then the fourth quarter of 2021, the tech investment going to be very hot again for the reason from the microeconomy number. Starting from the November of last year, the manufacturing, specifically the high value related manufacturing industry investment has been experiencing very high CAGR number for the past 5 months. So that's actually the capacity expanding, and then the so much high increase or high speed of expansion going to be reflected back into the technology innovation, along with the technology innovation investment, probably taking another 1 or 2 quarters. So that's why we see it. Why I said probably at the third or fourth quarter, the tech related investment going to be very hot, and then maybe get into a little bit of a bubble again. The last one happened for this reason. It's actually driven by the so-called the Chinese tech stock market opened in the second quarter of 2019. That's actually drive the whole year of a tech-related investment very hot, and then a little bit of bubble. So this time it's actually the real economy, the real investment, the real capacity expansion will drive the demand, will drive the supply, and then will drive the whole investment, and then the technology innovation startups hot again, probably at the later this year. So overall, this is our forward looking of 2021, and a little bit of an explanation of what happened economical wise, and then along with the investment wise in 2020. So I this is just only one angle of looking into the market from our point of view. So hopefully it could provide us some thoughts, food for thoughts, or provided at least one angle of looking into 2020 and then looking forward into 2021. So hope it's helpful. And then again, we're still very bullish on the O3 market, which is the consumer related, the biotech, and as well as the high tech, or what we call the manufacturing related high tech, the three sector. But during the last word is actually about our investment. During the past 3 years, we see more and more cross-discipline startups happen, and then those are the most interesting areas to invest it from our point of view. For example, there are more high tech or more cheap related tech to merge along with the biotech. There are some more data or AI technology to merge with the biotech. And for those two areas, we're probably have been investing most of the portfolio in the general China VC, because combine those cross-discipline portfolios, we have over 20 of them, and then each one of them are actually was started by the coming back overseas students or scholars. So this is our sharing for today, and I hope it's going to be a little bit of helpful for your looking or for your expectation of 2021. Let's see if we have time for 1 or 2 questions. Thanks for the inviting again.
Yes, thank you, Mr. Li. I hope you don't mind going a little bit over time answering some questions.
Oh, yeah, sure. Be honored.
And also for the hand raising the attendees, if you could just type your answers in the Q&A, it would be appreciated. So the first question, what do you envision will be the most active markets for startups in the upcoming years?
You mean the which direction will be hot? Which?
Yeah, the active markets.
The active market.
The most active markets for startups in the upcoming years.
Oh, for now, specifically for the first quarter, or now we're in the second quarter of 2021, it looks like the hot area. I mean, comparing with before, it's actually the biotech related. It's not only the pharmaceutical tech, it's the biotech related, because basically, usually the biotech taking a little bit longer time to grow into a certain stage and then come into some result. But or at least from our point of view, the valuation increase is actually at a kind of like a slower speed comparing to the other two sectors. But for the past half a year, or even for the past 3 quarters, we're actually, when we're looking at the portfolios, we're surprised to find like the biotech related portfolios are actually increased as probably the fastest speed of the valuation change for the last 2 or 3 quarters. So that's actually one of the proof of the biotech related investment are getting to very hot, and then it's actually much hotter than ever before. So I guess it's still going to be continuing for at least this year.
Thank you. The second question is asked in Chinese, but I will translate it into English. What is your opinion on the future of the businesses that started or expanded during the COVID pandemic? The future by after the pandemic?
This is actually a very good question, but this is very general. Let's taking one example to explain that question. There are two things happen to expand a lot during the COVID-19. One of them is online education domestically. One of them is the so-called online exporting e-commerce industry. Those are the two very hot sector last year, specifically in the last quarter of last year. It actually attracts so much money to invest into those two sectors. For those two sectors, let's put into a very short forecast for them. For the online education domestically, I guess it will be highly competitive, and then it may not be as good as people are expecting to grow for this year. That's one result. Specifically, there are a new policy related that being issued by the government recently, specifically during the past months and this month. And secondly, for the online exporting business, I guess it will still gonna be increased as a dramatic CAGR number this year, because the COVID-19 still controlled international travel. So that push a lot of importing and exporting business online. So it will be still at a very high speed. But when we look at China, because China has experiencing about, for the first quarter of this year, experiencing a CAGR of over 60% of increase for the first quarter. Is actually a dramatic number. But based on our observation, for the last 2 quarters of the last year, there are a lot of offline trading companies are trying to survive. So they get into the online exporting business, which means for this year, the supply side, for the exporting supply side, it's going to be highly competitive, because the players are actually 10 times more than ever before. But the demand side is actually still going to be increased, probably at a faster speed. But of course, the demand side is actually going to be grow at a much lower speed than the supply side in China. So let's say the exporting online business is going to be good, but it's going to be highly competitive. It's going to be extremely competitive this year. specifically from the supply side. So that's what's going to be happening to like the two industry who are experiencing the expanding during the COVID-19 last year.
Thank you. And again, for the attendees who have their hands raised, if you could type down your answers in the Q&A panel, I could ask it. For the third question, actually, there's a saying of a closed loop for a product. How important do you think it would be for a startup? And what are some industries that can easily form a loop?
Oh, that's a very good question, but it's a little bit hard to answer because it will be very different for different industry. Let's put it in short for your reference, because for the tech related early stage investment, there are two kind of things. One kind of them is like put into the technology and then change one link of the whole chain to improve that one link. That's one thing. Second of all, you make a tech innovation, it change the industry. For example, we have one company experiencing the two things during the past 5 years, and then now it becomes very famous in China. The company starting was doing the nano material on the membrane for the battery, for the car used battery. And then when they're using their technology change to improve the material and then to coating the material on the membrane, they didn't change the whole value chain. So they just buy the membrane, they buy the thing, and then they coated the material on top of that, and then sell it back to the battery manufacturing, and then they get their value, and then they get their profit. But starting from 3 years ago, 2.5 years ago, they began to produce what we call the solid state or half solid state battery for the car. And now they are probably the first one in the world to have the massive production capacity and then put into the real electric car for the half solid state battery. For the half solid state battery, because they changed the whole manufacturing and then the whole value chain, because there are not upstream and downstream ready for them. In that cases, it's very hard to do what we call, or you ask, the closed loop. So talking about the two things, if you just change one link and then improve that link, it didn't change the whole value chain. I guess the so-called the closed loop is going to be, you could do it before you raise money, you could do it after, or you can just leave it there because you didn't change the whole thing. But if you do some sort of like a thing, it will change the whole value chain. There are not upstream or downstream ready for your change. You need to really be serious about the closed loop proof in that cases. So that's actually the two examples, just very general, and then it's just one angle for your reference.
Thank you. We do have a lot more questions. Speaking of the investments in consumer industry, where do you see the future of fashion related to industry in China? Or will there still be a focus on food or drinks?
That's a good question. I guess the fashion industry in China has been not providing a lot of very good. It looks like it has not been providing a lot of good opportunity for startups before for the past couple of years. But recently, it's actually this month we closed one deal. It's called Duanmu Liangjin. It's actually using the traditional Tang and dynasty and Song dynasty art craft, and then along with the design of the Tang and Song dynasty to produce the very high quality, what we call the luxury brand quality of the bag, along with other accessories. And then they sell at the price similar to the Louis Vuitton. And then still, even though they have only 3 to 4 offline store, they still, and then each of the store are actually short than 1 year, but still for each of their offline store, they actually achieve the store sales volume equivalent or even more than some of the luxury brand. So getting back to the question, I guess for the fashion related industry of China, now the whole market is ready to take a really high quality, very China culture related, even though middle to high price branding for each of the category before. Before this year or before COVID-19 or 2 or 3 years ago, we didn't see a lot of startups are trying to aim at the middle to high and the middle to high quality, along with a very Chinese culture related brand, fashion related brand before. But now, taking this example, we're expecting this kind of like startups in fashion will happen in China for the next 5 to 10 years.
Thank you. Compared to the Silicon Valley, how do you think the Chinese entrepreneurial environment is different? What do you think we need to do as Chinese Americans to better adjust to the different environments?
I'm not quite sure about what the environment will refer to, but because we do a lot of international travel and then investment before the COVID. So based on my personal experience, I guess for China, the competition and then the driver are more intense than Silicon Valley, which means are much more in the competitive landscape. It's much more pressure and then competitiveness in China for both of internally and externally. And then the dynamics is actually very high level. For Silicon Valley, I guess it's very encouraging the high level of innovation, the uniqueness, etc. Innovation. In that cases, it gives a lot of the whole society gives a lot of understanding, a lot of respect to these kind of like a uniqueness in innovation or in idea or in technology. But if we're talking about the competitor or the competitiveness or the competitor landscape, for the Silicon Valley, I guess based on my personal experiences, actually in the level, it's a little bit less intense than in China. So that's actually quite different comparison for here and there. Yeah.
Thank you. Sorry we cannot get to all of the questions, and sorry for going over time. Do you have time for answering one more?
Yeah, sure. Yeah, be happy
to. What is your is the current China-US relationship and the new laws and regulations having a large impact on investment activities? And how will you face this problem as an investor?
Yeah, that's a good question as well. But since I'm not I'm not an expert on the international relation and as well as the international politics, so my answer is only probably reflect a little bit of a personal thought as an investor, not as an international relation expert. But I guess this is the very beginning of the new presidency of the U.S. So the diplomatic policy is only at its very beginning. It's very hard to say it has formed to a formula right now. In short, it's a little bit of hard to guess and then forecast what will be the diplomatic policy for the next 4 or even 7 years for now, because this is just the very first period of the new presidency. So that's one conclusion. The other one is like taking some of the phenomenon happen, or some of the things happen in the March, and then in a little bit of in the February, and a little bit of in the in this month. We can guess, or a little bit of like the China-US relationship gonna be kind of like still gonna be in the way of competitive, and then but it will not be volatile as in the last presidency diplomatic policy. It will not change dramatically from month to month or quarter to quarter. It's probably going to be much more stable. Still, it's going to be a little bit of intense, going to be competitive, etc. So that's my guess. Yeah, but it will. But what China need and what U.S. need is actually what we call this. It could be the stable. It could be the certainty. Because it's much better than the volatility, or much better than the dramatic change day by day or quarter by quarter, because it will provide a space for the two countries diplomacy to talk, to discuss, or at least to agree to some point of cooperation, probably along with some sort of like some degree of competitiveness as well. Yeah.
Thank you very much, and sorry for going over time again. It was.
Thanks for. Yeah, go ahead. I'm sorry.
And thank you for all of those who participated in today's event, especially our great speakers, of course. If there are any more questions, please contact us via the methods listed on this slide.